Are you facing the prospect of garnishment? You need the opposite of a glide path, or maybe a loan consolidation and a money market account. If only you understood the value of amortization or the point of an escrow. The financial world is full of incomprehensible jargon. At times, you may even feel it is designed to keep you forever confused. It's a big problem, especially because you're not in school anymore. You see, यहाँ रट्टा मारने से काम नहीं चलता, यहाँ समझना पड़ता है. So shall we? Today, in order to de-jargonize your life a little, I'll explain a term that gets thrown around a lot. NAV. In simple words, NAV or net asset value is simply a fund's total assets minus its total liabilities divided by the number of units issued. Bouncer gaya? Okay, let's look at an example. Let's say an investment company has assets worth 1 crore, liabilities of 20 lakh and has issued 8 lakh units. So, its NAV will be rupees 10. But will that value of rupees 10 forever stay the same? No, it won't. Why? It's because the value of stocks and bonds in any fund are bound to fluctuate. And with that, the NAV too will follow. Now, to the burning question. How does NAV affect your investments? To be clear, the NAV of a mutual fund is not a critical factor. A higher NAV simply means that the plan's investments have done well in the past or that the scheme has been running for many years. When you opt for a mutual fund scheme, the NAV only affects the number of units you get. Meaning, if you select a scheme with high NAV, you will receive fewer units, but the value of your investment remains the same. Nahi samjhe? Okay, so here are two schemes. Scheme 1 has a NAV of rupees 100, while Scheme 2 has a NAV of rupees 110. If you invest rupees 11,000 in each scheme, you will get 110 units in Scheme 1 and 100 units in Scheme 2. Now suppose both the funds' NAVs go up by 10%. In this case, Scheme 1 will be at rupees 110 NAV and Scheme 2 will be at rupees 121 NAV. The value of your investments would be Scheme 1 rupees 12,100, Scheme 2 rupees 12,100. Yes, they remain exactly the same. What does that mean? This means that funds with different NAVs but similar portfolios will appreciate or depreciate the same way. And one more thing, remember that NAV does not predict a mutual fund's future performance. So what's the bottom line? Rather than NAV, pay more heed to the quality of securities and bonds contained in a fund, the AUM size and the past performance. Don't worry, we've got you covered on that front too. Just scroll down to find out exactly what you need to look at when selecting a mutual fund scheme to meet your goals.
Investments in security markets are subject to market risks. Read all scheme-related documents carefully.